refer to as cross currents, where you can see the pressure. Oh yeah, are you going to jump in now?
Yes, exactly.
Good. You jump in, and I'll fight to get my platform back up.
Cool.
Go get him, Polina. Go get him.
I will. Hey, hi again. Yeah. So as Doc already mentioned, and we already mentioned during your webinar, US ADP Non-Farm Employment change will be out in about 10 minutes, and me and Michael again today are going to cover it for you and hopefully with you guys out there. And at the current moment, the forecast stands at 190,000, and the prior figures at 182,000 respectively. So private sector in the U.S. employment increased more than expected in October. A seasonally adjusted 182K. The reading boosted optimism over the health of the economy and the growing chances for a U.S. interest rate hike this year. The economy created 119,000 jobs in September, downwardly revised from a previously reported increase of 200K. Despite the volatility of this report, it does give guidance on private sector hiring. ADP estimate for November is expected to show a gain of 190. And let's take a closer look on what do economists from different banks and economic institutions think on this economic data release. And according to their views, we have the Bloomberg survey summary, where the median estimate stands at 119,000, average estimate stands at 187,000, and high estimate stands at 210,000, whereas the low estimate is at 150K, and the number of estimates this time has reached 14. And last but not least, Dukascopy community members poll on the impact on the US dollar Japanese yen currency pair. And according to our dear community members, the pair should go bullish 68.27% versus 31.73% bearish votes. Sorry, we also have a couple of comments from our community member, and CD1V1 says that the non-farm readings have generally been lower, below forecast, especially during the second half of the year. With a forecast of 191 expected as opposed to the previous 182, he expects the impact to be bullish and any positive gains from job numbers will favor the greenback, and USF is certain that a clear improvement seen in the U.S. private sector employment with an increase more than it was expected in October of the seasonally adjusted 182K. While the U.S. economy created 119,000 jobs, it does give guidance on private sector hiring, and he is bearish on the pair, and just a little roundup. So the discussions for December are still very important, as a rate hike seems very likely according to the FX Street. They believe that the Fed has to end the zero interest rate policy with its credibility now at stake. Over the past few months, there have been plenty of declarations about the health of the U.S. economy, in particular that U.S. job unemployment was stable and that inflation was set to reach its target of 2%. They also continue to believe that U.S. economy recovery is overestimated. It is now clear that the overall U.S. economy is based on a massive debt appraised at $18 billion, and a single dollar of revenue costs at least 3 times more in debt. And they perfectly understand why Fed member Evans' statement that the FOMC rate decision makes him nervous. Indeed, the price of the Fed credibility may be very high, and they do not expect high volatility on markets in euro US dollar as for today, and tomorrow is still on focus because of the ECB's meeting, and that's once again according to the Swiss Quote Bank essay, or no, not say. I guess that's pretty much it on the fundamental part of this economic data release. And Michael, you're very welcome to continue with the technical.
And for the third time today, thank you once again. So for those of you who have been in today's morning release, you probably know the drill. And I'm sorry because I'll have to go through the same data all over again. So for today's interim evening data release, we have the euro dollar this time with the positive surprise trading strategy, but the sell market. We're expecting the euro to decline. So the market sentiment for the given pair is somewhat bearish at 54.20%, with the US dollar being bought in 46.02% of all cases, and the euro being sold almost in half, namely 50.11% of all cases. Concerning the pending orders in the 50 pip range, 58.23% are to sell the euro, while in the 100 pip range, 55.44% are also to sell the euro. Other market participants have completely different views concerning the given currency pair. Lambda is really close to the perfect equilibrium sentiment with 50.04% of bulls slightly outnumbering the bears. The Saxo group has 55.93% of traders being short the euro, and the daily fix has actually 53% of traders expecting the euro to outperform the dollar. I personally trust the Saxo group sentiment the most, and it usually supports our sentiment. So that's just for your information. The market reaction table shows us the reactions for the previous several reactions we had of the after the US ADP employment change releases, with the highest one being 55 pips and the smallest one only 10 pips. So the approximate average reaction we could expect today is exactly 23 pips. And based on this reaction, we set the take profit and stop loss levels accordingly, with the stop loss level currently located at 1.0624. And unfortunately, we don't really have any other significant level close by. Maybe some with this trend line, which has been providing resistance and preventing the euro dollar from appreciating for almost 3 weeks now. Actually, I think it's slightly more, but nonetheless, this is a rather good resistance line. So in case we do see data fail to meet expectations, then we could probably see a hike of the given spare exchange rate not higher than this area. The take profit level, however, is located at 1.0578, and we also don't have any other significant level to bolster this support. So hopefully, if the data does meet expectations, or actually is slightly better, we will see a fall towards this level. And finally, the technical indicators, which are giving us either bearish or neutral signals. The most important one are today the 10-minute and the 30-minute time frame indicators, and unfortunately they are giving us mixed signals, so I'm unable to confirm which direction the pair is going to trade. So we'll just have to wait for the data to see for sure. And quickly about some top forecasters of the ADP employment change. The PMO market, capital markets expects the employment change to be 185,000, so slightly less than the forecast. and we already actually see the reaction to the upside, so I'm guessing the data failed to meet expectations, or not actually. Oh yeah, it's a lot better than anticipated, but we don't see the take profit all reached because of the hype just before data was released. So I think my widget to measure the reaction for some reason is not working. Oh, yeah, finally, yes. So the reaction is just under 28 pips, so slightly more than expected, but nonetheless very close to the average reaction. And we did see a fall after all, but like I already mentioned, the take profit level was not reached due to this unexpected hype just prior to the release. And what I would also like to say is that this is almost the final employment data before the finally the Fed's rate hike decision in December. So other employment data to expect is, of course, on Friday, the employment change, which will be closely, which the Fed will be closely looking at, since they mainly check the employment data before making the decisions about the interest rates. Although Janet Yellen did say that they will be actually paying close attention to all of the data released between the meeting minutes, the previous months and the upcoming months. So basically, we should consider all data as important for betting on whether the Fed will hike the rates or not. So I believe that is all from my side, and that's your point now.
Thank you, Michael. Yeah, the numbers came out, and the actual stands at 217,000 for the U.S. ADP employment change, and we can still see the reaction on the access screen. Congratulations to those of you who were precise in their forecast on the community. Meanwhile, yeah, we'll keep an eye on what's going to happen tomorrow. And definitely we will keep an eye on the webinar that we have this term. It's the Doc Dow and Jignesh on everything that's interesting and concerns the market. Doc, if you're there and if you can hear us, you're very welcome to proceed.
Thank you, Team Polina. Thank you, Mike and Polina. Dissecting the anticipation of another fantastic number of information that basically tells us something, but I'm not sure what. 217,000. Somehow or another, that seems like a small number, but in these times, if it was 10, they'd be